Where is Kelowna's real estate market headed in 2026? Is this the time to buy before it booms or the time to sell before it crashes? We're going to go through all of the numbers together and see where things are headed. But first, where are we today? I measure the market based on the percentage of listings that sell every month. If we see less than 15% of the inventory selling, that means we're in a buyer's market. It's good for buyers. If we see up to 25% selling, that's a balanced market. That's a really healthy place to be. And we can see that out of all three, condos are having the toughest time right now. So where were we in 2025 from a sales numbers perspective? We can see where the 10-year average is, and we can see this big gap between where we actually were. However, in January and December, we actually got quite close to our 10-year average. And I think that's just because there's a minimum amount of properties that are going to transact every month. How about on the listing side? How does that look? Well, for single-family homes, you can see just how much more inventory we have than the 10-year average suggests that we should. It thinks at our peak here, we should have about 1,100 listings compared to the almost 1,600 that we saw last year. So let's take a little bit more of a detailed look into each segment. For single-family homes, we can see that 10% of the listings are selling, but the majority of the sales are under 1.3 million. However, what's really interesting is that only 55% of the listings are in that same price range. So if you're a buyer looking under 1.3 right now, you may be saying, geez, everybody talks about how much inventory there is. I feel like I can't find anything good because there's only half of the inventory in that active price range. We have 940 listings, which is 40% more than the 10-year average suggests that we should have. And our all-time record was 1,950 listings. So we need to basically double our inventory before we reach that record. In January, we saw 91 sales, and our $2 million market is actually hanging in there pretty well, better than I expected. How about townhomes? Well, there we're seeing 11% of the inventory selling last month, with the majority of the action under 800,000. Here we see 65% of the listings in that same price range. There are 314 active listings, and that puts us 40% higher than the 10-year average. Here's the tough part. There are 25% of the listings that are still brand new. So if you're looking for a townhome in that 8, 9, even up to $1 million range, there are some good options out there. I'm sure there are some hungry developers. Our all-time record was just under 600 listings. So again, we need to basically double before we get to that range. And we saw 36 properties selling in January. How about condos? Well, here you can see only 8% of the listings are selling. The majority of the action is under 600,000. Here's where it gets really interesting. 70% of the listings are in that same price range. So we have very few transactions and we have the most competition. That makes this market exceptionally difficult at the moment. There's currently 685 listings, and that puts us at 70% more than the 10-year average. We can see our record was 1,305, so we're not quite doubling now. The biggest thing, we have over 2,000 units currently under construction that were either pre-sold or designed for an end user or investor. If even a quarter of those come to market, let's just say 500, that is going to have a huge impact on the listing inventory going forward. And in January, we saw 55 properties selling. So let's look back in time. How about the last 44 years? We can see our sales numbers and how they ebbed and flowed. And when they came under this average over the last 44 years, I call that a slump. And in the 90s, that lasted 7 years. And after 2008, that lasted 5 years. Right now, we're only 3 years into this. If the average is 6 over those last 2 slumps, that suggests to me that we're probably not through this yet. How about our inventory side? Our 10-year average is here, and you can see how much higher we are than that. But when I look at the 20-year average for listings, it's a little bit less scary. And here you can see where we peaked in 2008. This is the average inventory for each year, so it's not absolute numbers. This is the big story, though, the rental inventory that's under construction. We have over 3,000 units currently under construction that are designated rental only at the moment. That is an unbelievable number when our inventory as a whole is only 10,000 units. We have another third coming online. So when I overlay the sales numbers, which we see in blue, we saw this already, over with the vacancy rate here in orange, this is really interesting. When our sales are high, our vacancy is low. Sales high, vacancy low. Sales high, vacancy low, and so on. However, when vacancy climbs, sales go down. Vacancy climbs, sales go down. Vacancy climbs, sales go down. Vacancy is climbing. So what does that say should happen to our sales numbers coming up if our vacancy rate continues to climb, which I suspect it will? So what kind of impact is this going to have on our market? Well, of course, vacancy is going to climb. We said that already. We'll probably cross 10%. So that means there's going to be downward pressure on rents. So our investor buyers are probably going to dry up. They only make up 5% right now. They used to make up 15%, but that's no longer the case. And if rents come down, then my biggest concern is our first-time home buyers. Because if you can rent a nice property for $1,800 a month, why do they want to buy their first condo? And if they don't buy their first condo, then those people can't move up. And then those people can't buy the mid-sized properties, and on it goes. And we have this big trickle-up impact. First-time home buyers make up 24% of our buyer pool at the moment. That is a significant portion. So right now, that's my biggest concern. How about the market as a whole? Where are things headed? What does the forecast show us? Well, I think sales numbers for single-family homes are going to hang in there. I think we're going to hold relatively stable despite what we're seeing. And townhomes also will do relatively well. Those two seem to move in tandem. Condos, I could see sales really having a tough time this year, especially in relation to the amount of inventory that we're going to see. What does that do for prices? Well, kind of the same story. I think single-family homes are going to hold relatively stable along with townhomes, but condos, we could see a decrease in prices of about 5%. So to answer the original question, is this the time to buy or sell? Well, I think it depends on what you're buying. If you want to buy a condo that's high-end, I think you should wait. There's a lot more coming to market, and there's going to be a lot to choose from. There's going to be some very hungry sellers out there. If you're buying a single-family home for you to live in and to enjoy, yeah, go for it. I don't see this market changing anytime soon over the next 2 to 3 years, but I also don't see prices falling off a cliff all of a sudden. I think we've already seen our major correction there. If you're thinking of selling, should you sell now or wait 6 months or even 12 months until next spring? Again, we're not going to see a lot of changes over the next 12 months. We're going to be in this market for the foreseeable future. So if you're thinking of selling or waiting, well, you either need to wait probably 3 years, at least 2, or may as well get going and move on with life and keep moving forward. If you have any questions or would like to discuss this further, give me a call anytime. I'm Colin Krieg with RE/MAX Kelowna.